Is ticker symbol O Realty Income still offering a buying opportunity in 2024 and beyond? Now, as you see right here in a few screenshots from some of my larger portfolios, I have been a huge fan of Realty Income, ticker symbol O, and have been buying up shares since before 2020. Now, as of filming this video currently across all my portfolios, I think I'm sitting at around 2,800 shares combined. Now, Realty Income trading pretty much right in the middle of the 52-week range at around $56 per share as of current, in my opinion, as a long-term dividend growth investor, is still offering a massive buying opportunity. And as you can see here, I practice what I preach. I've been buying a ton of shares of Realty Income over the last year now. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, because Realty Income, of course, is a real estate investment trust, along with all other REITs and real estate, they are very sensitive to what interest rates are at. And coming over here to the Fed rate monitoring tool, you can see the actual probability priced in right now of the future possibility of different interest rate cuts, hikes, or if the Fed's going to leave interest rates alone. Now, this has been a very important tool to keep an eye on if you are holding, of course, a lot of real estate and want to know the potential future value, and definitely the reason why, on why Realty Income is now trading $10 above the most recent lows. Now, coming over here to the Fed rate monitoring tool, this is one of the main reasons I'm so bullish on Realty Income and why I think Realty Income will be trading in the $70 or $80 range within the next, say, 12 to 24 months. The current January 31, 2024 Fed meeting shows that there's a good chance that interest rates are going to be left the same, which isn't really going to put a shock into the market all that much, but what definitely could impact the market, especially real estate and REITs quite significantly, is the fact that there's a 14.5% chance that the Fed's going to cut interest rates by 25 basis points. Not to mention by March of 2024, there's a very, very high significant chance being priced in at least. And of course, these are all just predictions, guys. Take this with a grain of salt. But there's a 75.6% chance as of right now that rates are going to be dropped 25 basis points by March. And keep in mind, 25 basis points is not really going to lighten the load for a lot of real estate investment trusts that are trying to raise money through the debt markets, but it is a start. And because the stock market is forward facing, it is pushing things towards the right direction. Now, if we were to look at the May meeting, there's a 73.6% chance that another 25 basis points from then would be cut, and a lot of investors seem to think that this is very realistic. Then around halfway through the year next year, which is when I personally think Realty Income is really going to start to move, there's a 66% chance that rates will be cut once again, and even a small portion of investors think that rates could be cut significantly from there. For those investors listening along that aren't that aware, when interest rates are much higher, which they currently are as of right now, real estate investment trusts or REITs have a lot harder time expanding or even servicing the debt that they already have. Because when interest rates are higher, money is more expensive to borrow, which can definitely make it tough for some companies and especially for real estate. Historically speaking, when interest rates go up higher, real estate values go down, because there's just not necessarily as much money to make when rates are sitting sky high. The worst pain from interest rates should now most likely be behind us. And with knowing that, I think a lot of investors are starting to dump a lot more money into the equity markets, and you can see this across multiple different stocks and ETFs, of course. Now, even with this all being said, it's still going to be interesting to see how Realty Income plays out over the next year, especially with all the new things that Realty Income has been doing, like, for example, acquiring Spirit Realty, which by no means is a small acquisition and by no means isn't going to change the fabric of Realty Income whatsoever. But even still, with Realty Income having a very, very well diversified portfolio of what I would like to call mostly recession-proof industries and businesses, I think Realty Income is going to be just fine over the next 5+ years, especially for longer term investors like myself. But even for some of the shorter term investors at this point, if interest rates are looking to be coming down, not really rising much higher from here, and the fact that Realty Income for the most part doesn't have much debt maturing anytime soon within the next few months or even year, I think Realty Income could be a massive opportunity moving forward. Now, next I wanted to talk a little bit more about my plan with Realty Income and the fact that as of right now, with around 2,800 shares of Realty Income through my portfolios, I'm currently earning over $700 a month in dividend income. And this right here, for example, example is one dividend that I received today from one of my portfolios from Realty Income of $235+. But it's not only because of interest rate cuts over the next year on why I've been buying so many shares of Realty Income and why I continue to buy a few shares on a daily basis across my portfolios as of right now, but it's also because Realty Income's fundamentals are what I like to call almost bulletproof, and I can't really find a better way to have real estate exposure other than buying more shares of ticker symbol O. Now, Realty Income's current portfolio is around 13,250 commercial properties with over 1,300 different clients. Now, we've talked about Realty Income's top 10 industries before in other videos, but once again, I'll repeat myself. Realty Income has exposure to some of the most recession-proof industries, which means that even in the next 12 months, if we do go through a mild or even moderate recession, I think Realty Income's clients, for the most part, will be just fine. And the reason I say that is because, of course, I do have data to prove that. Over multiple different recessions and crazy market turmoil, since 1992, Realty Income's occupancy has barely even budged, down maybe a percentage or two during the most rough times in the economy, but overall, Realty Income's portfolio has remained occupied and the rent checks have continued to be sent in. There's a few reasons on why I've been buying so much Realty Income as of lately, but one of the main reasons is the fact that Realty Income has a super high quality, diversified portfolio of different grocery stores, convenience stores, dollar stores, and a lot of different names that I would consider for the most part pretty recession resistant. And even though there are some names within the top 20 client list, names like Walgreens, Dollar General, Dollar Tree, and others, that some Realty Income bears have been sort of pointing out, saying that these names aren't doing all that hot as of right now. And those are some of Realty Income's top clients. A lot of people don't realize that Realty Income has over 13,250 commercial properties with over 1,300 different clients. This is a mega REIT. Realty Income is not the small little baby REIT it was even a few years back. And there's honestly some pros and cons to that. I would say one of the pros are the fact that it's even more diversified, which makes it more of a sleep well at night REIT, in my opinion. But one of the cons is that Realty Income might be almost too big for its own good now, which means that there could potentially be less growth opportunity compared to those that bought into Realty Income, say, 5 or 10 years ago. Now, Realty Income's dividend as it sits right now is around 5.4% forward dividend yield. And believe it or not, just a few months back, Realty Income's dividend yield was well above 6%, almost nearing 7%. And I really hope some of you were able to grab some shares of Realty Income when it was trading so low. But Realty Income in the last month or so has even raised their dividend once again, which now that I have around 2,800 shares of Realty Income, it is actually starting to make a bigger impact in the portfolio. But Realty Income has been doing what Realty Income does best, paying dividends on a monthly basis consistently, growing their overall portfolio, playing on the offense, and consistently raising their dividends pretty much every quarter, or at least that's what they've been doing as of recent. But now I want to hear from you guys down below when it comes to Realty Income, ticker symbol O. Do you personally think Realty Income is offering a buying opportunity for long-term dividend growth investors that are seeking capital appreciation, but on top of that, nice juicy cash flow? And also, if you're holding ticker symbol O, how many shares do you have as of right now? If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.